Hello and welcome to the stock market analysis. Well, last week the market had a terrible week actually, and what is going to happen this week? Let me just start this week by looking at the Dow futures. Alright, Dow futures. Now, this is the Dow futures, and as you can see, it's trying to go up today. Now, here is a very important support area which I've highlighted in the DIA in my past analysis. This is a support area, so if you could drag it over, you can see that actually the Dow was doing quite well compared to the S&P 500 and Nasdaq. The reason is because there is a long consolidation here, and the longer the consolidation, the greater the support area. So you can see while QQQ and semi stocks were being decimated, like Nvidia dropped by 10% the other trading day, the Dow actually performed quite well, not declining by that much. Actually, it found support here, and you can see that it had a bottoming tail. Now, tails are very important. Bottoming tails are very important because they tell us that the market went down, and then by the close of that trading day, it ended up. So we have a green candle here that tells that support is kicking in. It's trying to resist going down. The bottoming tail tells us that the bears are not so much in control. Bearish momentum is actually slowing down. You can see here there's red bar all the way boom down here. But here we have a small bodied candles and then a bottoming tail. They're telling us that bearish momentum is slowing down. Of course, we have a bearish cross here, but sometimes if support is strong enough in the Dow, it can neglect this bearish cross. So with all indicators and bearish crosses and so on, it depends on your experience. The more experienced you are at something, you take many things into consideration, and that's why some traders and some technical analysts, especially newbies, they think that, hey, why isn't this working at one time but it's not working at another time, it's working at another time? So you have to take into consideration many things, and at this juncture Dow is at a very strong area of support, and there is a possibility that Dow may help to stem the bleeding in the general markets. So if we take a look at the 2-minute chart, 2-hour chart, you can see that although it's below the 200 MA, the 20 MA and 50 MA are trying to cross, have a bullish cross. Here we have a bearish cross here, and it decimated the Dow for a long time. Remember, this is a 2-hour chart, and what you can do is, I like to draw a downtrend line that connects as many highs as possible, and look what happened. One of the way to determine a trend change is when the Dow breaks above a downtrend line. So if it stays above this downtrend line, let's say it goes here and trades down, but it stays above the downtrend line, we may see the beginning of a new uptrend in the short term, and along with it, hopefully the Nasdaq, the S&P will follow along. So you can see the bottoming tail here. Now later I'm going to go into the stochastics and MACD, but before that, let's take a look at the S&P 500 futures. You can see that there is some support here. This was a small triangle, and if I drag it here, you can see that's where support is on the left. Okay, and that's why we have a little green candle here, right, at after the red one. And if it stays above the body of the red candle, we might have a bullish RMI. Maybe it might go up today, but of course, compared to the Dow, it's not as nice as I would like. Normally, all these very nice rises, you have to go above a downtrend line. Maybe this one, you need to go back above it to have a sustainable rise. This one, I don't seem to be able to draw a downtrend line except from here to here, and you can see that in the 2-hour chart, the S&P 500 is trying to form a triangle pattern. Which way it breaks out will determine where it wants to go. Let me just draw it. Triangle, if you can see, if it breaks above this downtrend line, goes back above the 2050 MA in the 2-hour chart, most likely we will have a short-term bottom, and then we see if it can make higher highs and higher lows to form a new uptrend in the short term. So this is an area of support. We will not watch the price action today. Now let's take a look at the QQQs, which is the ETF for Nasdaq, tracks the Nasdaq. Look how nasty it has after it fell below the 50 MA. Large red candle that hinted fall. Big large red candle that hinted the damage that will come. It is now sitting at this area of support here. Now there's a gap, a little gap up. And what is important here, I don't know whether you can see it, is some kind of ascending triangle variation in the past. And if you have followed my work in the past, you will know that the top of an ascending triangle is actually a support area. And you want to watch this area very carefully, because even though a bearish cross may be coming, the top of the support area might be strong enough to help it to go back up. We want to see a slowing down of bearish momentum. Maybe a double bottom would be my best way to form a short-term bottom. I don't like how it bottoms. Usually it doesn't just bottom and slash back up. It might go up a bit, decline, and then form. That is what I do experience from my experience point of view. Okay, 2-hour chart, you can see, let me just use the hourly chart. The damage happened when it traded below this uptrend line. You can see the consolidation breakdown, consolidation breakdown. These are all tradable patterns. This is a breakdown of a consolidation. Actually, every consolidation that breaks down is a shortable setup, because when it's below the declining 200 MA, 50 MA, and 20 MA, all breakdowns are actually tradable. You can short here, put a stop loss here, short here, put a stop loss here, and cover by the end of the day or 1 or 2 days later. And we are now at the support area right now, you can see, but that doesn't mean you can buy. You should buy only for overnight holdings, only if it's above the 20 MA. If you're day trading, that's okay. You can buy or sell anytime you want. So that covers for the daily and charts. But now let me just go back to the S&P 500, show you the weekly chart. Is always the brand new week is always good to look at weekly charts. Now you can see that the market has gone up quite a lot in the weekly charts. Here is a long-term support in the S&P 500. Let me just change the color because it's easier for you to look at support when it's green. Green means buyable area. There's a small consolidation here, previous high. So this is a very strong support, which is probably where it will meet the 50 MA. But right now, if you look carefully, it is meeting the 20 MA. All right. And here's a small support area. Usually, the 20 MA in the weekly chart can be an area of support. It can be an area of support, but of course, we need to see it stabilize before moving back up. Now, here is a very large red candle that was formed last week. But if we are able to close a bit higher in the week here, all right, by the end of Friday, this will be a bullish Harami, and that will be a bullish candlestick pattern in the weekly chart. Now, let's take a look at Fibonacci. Always use Fibonacci if you can, not because you should use it, but because to know what other participants are thinking, and because it's so useful. Now, the move from here to here, the retracement, we are at about the 23% now. 38% is about here. So 23% could be an area of support. All right. Now let's change to stochastics and MACD indicator. Let me go to futures. All right. Now, first of all, the stochastics in the daily chart is quite oversold. I don't like the way it's forming because there's zigzags and crossing. I would like it to be smooth like that down. That hints of possible reversal, but at least it's telling us that there's already a bullish cross and it's quite oversold. And oversold doesn't mean that, hey, buy straight away. It means that be on the lookout for a bullish reversal pattern. And here we can look that is a possible shortening of MACD histogram. When the MACD histogram shortens, it means that this bearish momentum is slowing down. You want to see it shorten by the end of this day, and so maybe there might be a reversal, short-term reversal ahead. If we look at the Dow futures, right, we can see that the MACD histogram has already shortened. It tells us that bearish momentum has already slowed down. Bullish momentum is coming in, and if there is a bullish cross here, for example, there's a bullish cross here, you might see a few days, at least a few days of rise in the Dow futures. And here we have it oversold. It's not as nice as here because there are zigzags here. I don't kind of trust stochastics like this. I prefer it to be lightly smooth down and then smooth up. It's telling us that it's already oversold. There's a buy signal coming in. So now one thing to note about bottoming tails is that bottoming tails is a gauge. If the Dow stays above the low of this bottoming tail, no matter what it does, it will eventually go up and make new highs. So always look at the lows of the bottoming tail. Some traders, they do trade out of bottoming tails. That means they see a bottoming tail, they will buy it. For example, they see a bottoming tail, they will buy it, boom, up, maybe hold 1 or 2 days. But at significant areas, you can actually hold it for weeks, and it's a tradable setup. So for the QQQs as well, we are going to look at stochastic and MACD. No slowing down on bearish momentum. You can see it's still curving down. There's no slowing down. And of course, the MACD, the stochastics are not very nice, curving, zigzag. We want something to be like that, smooth down and then up. So of the S&P 500, the Dow and the Nasdaq, the more dangerous ones to play with now is tech stocks, because you don't know how far they can still sell off. You know, if this, but there's support here. If this support does not hold, this ascending triangle top support, it may drop to the 200 MA, and that can be devastating. Now, let me just go to the seasonality of QQQ. You can go to stockcharts.com, look at the seasonality. You can see that for the past for 5 years, April, it has gone up 60% of the time, but with a very meager return. All right, the big returns are in November, tech rally. Of course, May, June, and July. July is a very, very good month as well. May, that's gone up 2.9%, June 2.5%, but April, 60% chance of closing higher. So we might see a bounce up, but maybe not a very nice gain in the in April. It's only 0.2 average return for the past 4 years. So that's something to consider and think about. Alright, I think it's a bit long, today's video, but because we have a very important week last week, so let me just go on a bit longer because it's important. SMH, let me just go to alright, these are without the indicators. SMH is dropping to an area of support. It's here. If the support holds, right, this is previous high support, right? If the support holds, then we might see a bounce up. So this is a support area, but if support does not hold, you can see it going down again. Okay, maybe down to even here where it will meet the 200 MA. So at this moment, it is still waterfall cascading down below the declining 200 MA, 50 MA, 20 MA in the 60-minute chart. Don't touch semi-stock or tech stocks yet at the moment unless it goes back above the 20 MA. So continue to be cautious, to bearish. Okay, although in your back of your mind, you know that the major indexes and sectors are at area of value, area of support. So you must be sharp as an eagle, look for signs of reversal to maybe participate in a short rally. Okay. Now, what is important for you is, if you're into semi-stocks and tech stocks, you might want to wait for May. This is SMH. May, June, July, it's very good, 100% of the time with gains of 7.8%. So that is all part of the strategy. Doesn't mean that, okay, it's going to go up 100% all the time, every May to June, July. It's just you want to have as much high probability as possible, right? Now, tech, you can see this XLK, which tech. Why do we want to look at XLK? Because if techs are doing well, it's going to make the major markets rally. And sometimes when techs are doing bad, for example, here, it already hints that many things are going to go down in the future. So we are at a significant area of value here. You want to look at the consolidation here. Look at here. This is actually quite a strong support. You want to see slowing down of momentum, but don't buy yet because we are still in a waterfall kind of crash. In the hourly chart, wait for it to go back above to 20 MA before thinking of long tech stocks for a few days. Okay, intraday, you can long or short anytime you want, right? Because day trading, you don't keep your positions overnight. Now let's quickly look at the gold. I know it's getting a bit long this, but usually Monday I try to do longer because it gives you an idea of what to expect for the whole week. All right, the most important one is the Monday, so do pay attention to what has already happened last week, and Monday is an important one, so I try to do a bit longer. Now gold still consolidating. I just treat it as a consolidation. We might see maybe a triangle continuing pattern consolidation. Once it touches 20 MA, if it breaks out, it will go higher. So I just treat it as a consolidation. Why? Because it's still above the 20 MA. We should be neutral to bullish buyers in gold. Crude oil, you can see that try to rally, have a very big, large topping tail. That means it's really not quite good for oil at the moment. It's trying to break below the 50 MA, and if the 50 MA and 200 MA does not fall, we could see it go lower. Okay, this is not a pattern that I like to see in stocks or whatever that's going up. It will take some time. Even if it's an uptrend, it will take some time for it to go back up because of the amount of resistance area here. All these are absorbing supply resistance. So if you might want to be careful with oil. If it goes below the 50 MA and 200 MA, then more damage to all stocks might happen. Now going to Bitcoin. All right, Bitcoin is still trying to find support here. This will be a very important consolidation, and if support does not hold, we might see it going down the 200 MA. Let me just quickly show you Bitcoin's seasonality, which you have to be a bit careful in May, June, July for the part, because April, May, June, right, it's not very good months for Bitcoin because it only closes for higher 40% of the time, 25 in May and June, but nice gains in July. So January, February, March, we have nice gains in Bitcoin because seasonality is very nice. So a lot of these companies that are associated with Bitcoin will usually do very well from January to March, like MicroStrategy. But in April, May, and June, things might not be so good for Bitcoin. Okay, so that is something. Doesn't mean it will crash, right? Doesn't mean it will go all the way down to 30,000. But you have to put everything as high probability as possible. If something seasonal is not very good, then you have to keep it at the back of the mind. Instead of pushing 100% of the pedal, you want to push maybe 30% or 20% of the pedal. Okay, so I hope this analysis has been helpful to you, and do join me tomorrow and see you in the next one.